What's up guys, my name is Kevin Murray and today I'll be talking about my current weightings and my stock market portfolio in 2022. And you could say I'm a newer investor in the market. I started really in 2019 experimenting with more like derivatives, like options and stuff, and more short-term day trading. Then I experienced the 2020 crash, and 2021 I experienced the highs and lows of the market, and now in 22 I kind of converged into I'm a long-term investor. My kind of time horizon with these individual stocks that I hold in my portfolio, I have like a 4 to 5 year outlook on these types of companies. Like, put in the work and see where it happens, and these are going to be my current holdings. Like, I own 8-9 stocks in my current portfolio, and I feel comfortable holding these stocks for the long term. And these are types of industries that I understand on a high level, and like I'll ride and die with these companies. And if these fundamentals change, I'll sell them, like no question, because I don't want to be attached to these businesses or these stocks. And let's start it out. Like, I want to just go briefly like on each stock, 2, 3, 4 minutes each, and briefly explain like why I own this and my current like position on them. Like, and Alibaba essentially is the Amazon of China. They own, like, they're known for like their e-commerce side of their business, their cash cow businesses from Tmall and Taobao. They're getting into international e-commerce, cloud, which is a big thing in China right now. They're into telehealth, grocery stores, restaurants, malls, streaming services, all this kind of stuff. And I'll show you my next slide, like why I'm bullish on it. Like, Alibaba is currently 17% of my portfolio, and I know it's very overweighted in terms of my international exposure, but how the market has been doing in my portfolio, it became 17%, and I went between, to be honest, like 12, 13, 14% over time, but we'll see what happens to the market in the short term. But in the long term, I think Alibaba is like a smoking deal. And one of the bullish things where I want international exposure is, like, I just don't want to be just in the U.S. equities or U.S. economy. And these are all my bullish summaries of the stocks I own in my portfolio. Like, by 2030, 72% of the population in China will be in the middle class, and 41% right now in 2021, 2022 is like only 41% is in the middle class in China right now. We can see that huge gap. Like, which companies are going to benefit from most of the Chinese people going into the middle class? And I see Alibaba with their huge ecosystem from e-commerce, from all these stuff, food delivery, digital media, and all this stuff I talked about earlier. And their metrics seem undervalued in terms of the revenue, earnings, and cash flow projections out. And this is why I own Alibaba in my portfolio, because I'm bullish and want exposure to the Chinese economy. And the next company I own in my portfolio is Corsair. I want to have some exposure to the gaming and streaming industry. I've seen the growth of gaming the last couple of years, from the growth of Twitch, the growth of YouTube gaming, and pretty much all-time views for these types of streaming services and YouTube and videos are at all-time highs. And Corsair is the one-stop shop for gaming, streaming, content creating, and for casual gamers, from building PC parts to controllers to softwares to the Elgato stuff. And they have so many products and services that anyone that uses Corsair has said, like, it's a high reputation brand. It's a little pricey, but you pay what you get. And the companies they own is like, they own Corsair computer parts, controller brand Scuff, Epoch, which is their app for turning your phone into a webcam, Gamer Sensei coaching, custom PCs Origins, Visuals by Impulse, like overlays for streamers. And they launched over 141 products in 2021, and like in the short term there's like a lot of negatives to it because they're getting COVID comps from 2021 and 2020. The GPU market has been red hot because of the cryptocurrencies and everyone holding back to buy new PCs, and that in the short term is a huge hunch for Corsair. DDR5 coming out in 2022, which is a huge thing for the gaming and streaming industry, and their plan by 2026 to have 3.6 in revenue, which is a 12-13% CAGR each and every single year. And they want to have increased margins, increasing service revenue, increasing warranties and all that stuff, increasing the streamer deck hardware, because the stream deck is a big thing for streamers nowadays, and they want to capitalize on that specific market, having third parties or outsiders or coders put their new apps to benefit the streamers, and they get Corsair takes a cut of it. And that's why I'm bullish on it, like content creating, competitive players, casual gamers, and gaming. And that's why I own Corsair, which takes into account 12% of my portfolio or weighting. Next stock I own in my portfolio is Warner Media. So they're a streaming platform. So think of think of Disney Plus, think of Paramount Plus, and think of Netflix. And Discovery just merged with Warner Media from the AT&T acquisition. And this is about 6% of my portfolio right now, or my weighting. And I'm bullish on streaming because more and more people are using streaming platforms than TV nowadays, and companies are capitalizing on it. Like, we're going to get a subscription from these consumers every single month, and people love the reality shows and movies. This is my bullish thesis on Warner Media. They're the most diversified and biggest brand in terms of content they have. Like, they own like a lot of brands that resonate from little kids to baby boomers, and the types of brands they own, it's going to resonate with some type of audience, and it's so diversified from HBO Max to Discovery Plus, and that's why I'm bullish on streaming. And the next company I own is Callaway. And when you think of Callaway, you think of their legacy brands, like what I said here, the biggest market share in golf balls and equipment for like golf. They own apparel brands like TravisMathew and Draft Wolfskin. OGO is like their backpack brand. They own Odyssey, the putter brand. But why I'm bullish on this company for the long term is Topgolf. They acquired for pennies on the dollars during the pandemic. Cash cow type of business. The amount of people, the foot traffic they have, the margins they could get, food and drinks, and how it's going to synergize with Topgolf. Like, people that come to Topgolf for the first time, 50% of them are non-golfers, I think, statistically. It's a win-win situation for both of them. And you could read up on like why, more specifically, why I'm bullish on Topgolf down here. And the next company I own is Meta. Everyone knows what Meta is. Like, it's social media, online advertising, getting into the metaverse and spending billions of dollars into that for the AR and VR side of their business. And let's just think of their cash cow businesses. Like, if you want to advertise, if it's small to large, you advertise on Facebook. They have the numbers. They have the daily active users in terms of billions. There's like short-term catalysts for them from how they portray it on the news, stealing your data, but every tech company does that, from Google to Amazon to Microsoft to Apple even. But why I'm bullish on Meta is, like, part of me is like the metaverse, like the Web3, the crypto. Like, you're like one of the biggest players and spending so much money, and this might pay off maybe 10 years down the line. Not the next 2 or 3, but the 10 years. That's my long-term outlook for it. And they're building the world's fastest supercomputer. They're increasing average revenue per user internationally. They're getting to more short-term reels. They're building more groups to bring like-minded individuals together and like getting the creator economy. And there's like a lot of things going for them. And right now it's about 15% of my portfolio in Meta. It seems overweighted, but this is what I think. These are the risk factors here, risk factors for Callaway too. And the next stock I own in my portfolio is PayPal. I want to have exposure to digital wallets, the fintech industry, and this is like one of the safest bets for it. They have the market share in terms of people using it on their cards. So they have like, I think over 71% of online companies have PayPal as a feature if you want to go through it. And why I'm bullish on PayPal is like they own the top 2 biggest apps in the finance industry, like Venmo and PayPal, and they haven't optimized Venmo at all. Like, it's less than 1%. That's going to be one of the growth drivers, from like credit cards to crypto to debit cards and all the fees they get. And PayPal makes a lot of money off fees from sellers and stuff. But I'm bullish on the e-commerce, digital wallets, being our society going towards digital. And I think PayPal has a very smart management team all around it. And they have and the next company I own in my portfolio is Skyworks. I want to have exposure to the semiconductor industry, and they used to make 5G or radio frequency devices for 5G technologies, like for Apple, which is one of their biggest customers, and Samsung. So when this mobile devices do well, Skyworks does well. But this company has been taking a hit, and the growth of 5G is just in its beginning stages. And every device in the next decade will be using it, from smart devices to refrigerators to pretty much anything. And I want to have a little exposure to it, and I own about 14.7% of my portfolio in Skyworks too. Like, again, it's very overweighted in my opinion, but because of the fluctuations in the market, that's how my portfolio is. Like, one of the risk factors to it is like 39% of the revenue comes from Apple, and if Apple doesn't do good with this upcoming recession, Skyworks is not going to do as good, you could say. And I want to have exposure to that. Next company I own in my portfolio is Trulieve. I want to have exposure to the cannabis industry. It's going to be a $100 billion industry by 2030, and what companies are going to be benefiting from that? I want to be picking the best, like, in terms of management team, in terms of revenue growth. Their size too is a factor, and better margins. And right here, Trulieve is the most profitable MSO in the company. They're the largest retailer across U.S. and 12 states. And there's like many bullish things about the cannabis industry in the short term. The Safe Banking Act just passed. More and more states are legalizing it. And we're just waiting for that federal legalization. That might be coming, we don't know, but it's the step in the right direction for the cannabis industry, and that's why I want to have exposure to it. And like I said in this video, like, I'm not gonna go really in depth why I own it. You can read it here. And one of the last stocks I own in my portfolio is Upwork, which accounts for 7.6% of my portfolio. And I'm bullish on the freelancing industry. It's a $1.3 trillion industry. It's a popular type of career for millennials and Gen Z. And it's low cost for companies. And you could track top times from across the world and across states and stuff. Like, it saves time and energy for people to work at home instead of going through the office. And Upwork is just the one-stop shop for small companies like startups to large companies, from Microsoft to Airbnb to GE. And they want to work with any type of company that they need help for. And by 2024, remote will represent 30% of my employees worldwide. All these companies, you could say, in simple terms, like, I know it's very vague in how I explain them, and I just want to go quick on them because I'll do more separate videos on each company, going more in depth, deeper dive into them. But these industries and companies that I own, I'm very bullish on. Like, I want to have international exposure to Alibaba, Corsair and gaming and streaming. I want to have part of Warner Media, streaming platforms. You see the rise in that. Callaway Golf with Topgolf. Topgolf has been at all-time highs in terms of demand, in terms of golf, because of the pandemic, and Topgolf, the cash cow business. Now with the metaverse, social media, online advertising, social media, PayPal with digital wallets, fintechs, online e-commerce, and the rise in virtual inner society, Skyworks, semiconductor industry, 5G. Biggest customers is Apple, TrueLeaf, cannabis, huge industry they're going after. Tattoo shops, I'm not currently, my sister owns this stock, but I'm not currently. And Upwork is the freelancing industry, $1.3 trillion industry they're going after. And these are the stocks I own in my portfolio, and that's all I have for my video. But thank you for watching, and peace out.